Hey everyone, and welcome back to another portfolio update for today. So as you can see, over the past week, the couch investing portfolio was up 5.17%, whereas the S&P was up just 1.65%. Year to date, we are now up 7.36%, whereas the S&P 500 is up 2.23%. And since the start of this portfolio, we are up 71.4%, whereas the S&P is up 20.6%. Now, over the past couple of days, as I've mentioned last week, I did make a couple of moves. And so we'll talk about those. We'll go over the upcoming earnings week, couple of comments on, well, the NASDAQ, and small introduction to Circle, the company that did IPO last week. Oh, and also a quick review of Broadcom's earnings report. And so if you're interested in hearing more, sit back, relax, do hit the thumbs up button and subscribe as well. And let me know what type of moves you've been making over the past couple of days. All right, so let's start off with the portfolio update. As you can see, the top three still did not change. Number 4 now is Micron. Micron has been going up quite a lot over the past couple of days. And so Uber is here number 5, Rocket Lab at number 6, Nebius at number 7, because that position is now up 104% for me. So I guess I'll have to wait a little bit longer to add even more to that position. Alibaba is number 8. Then we've got number 9, AMD, Meta, Intel. That one is still struggling, but I do think that I will be in the green with Intel later this year. Then we've got Tesla here, 12, dLocal, and a cash position that did increase now to 3.17% of the portfolio. Then we've got Celsius, Upsellera, Owlet, Nvidia, and well, Nvidia and Palantir is just one share. And so as for the moves, I did deposit another $5,000 in the portfolio. It's been a while since I added some cash, so now I'll have to wait another month or two in order to inject more cash. But I injected that, and then I went on a little buying spree. Didn't really buy that much, but I did sell 4 shares of Tesla. Those are the same 4 shares that I bought at $250 or something like that. Sold those on a Friday. Why is that? Well, probably an emotional move on Friday, although I still have majority of that position. It's still 5% of this portfolio. So yeah, I took those 4 shares off and just increased the cash position because, again, I do want to increase the other ones. So I did increase dLocal by 16.48%. I think dLocal at $3 billion or so in market cap. The company is growing very quickly. It is profitable, has virtually no debt. To me, that's a no-brainer. So I will keep buying if we stay around $10. I will keep increasing that position because I do think that this one will also join the triple-digit returns, such as a Rocket Lab, a Nebius, and hopefully some others in the future as well. So that's dLocal. I made various videos on dLocal on my channel already. So if you don't know what or why I'm bullish on that, please go watch those videos. Then I did increase my Alibaba position by another 9% here. So that's now 6.15% of the portfolio. Very simple. And by the way, Alibaba, I am still up 34% on that position. I was up more. I think it was up already 55% or so at the highs of this year. But for me, Alibaba still, it makes no sense for it to be trading at these prices. I think last quarter was actually much better than what the market was expecting. Taobao and Tmall, so the China commerce side of things, actually performed much better than expected. The cloud side of the business is also now growing quite rapidly. So I'm picking up here more shares. And then yes, PayPal, despite PayPal being well over 10%, 10.6% of my portfolio, I was like, you know what? $72.87. Let's pick up another 15 shares. That's just an increase of 4.66% of that position because it is already a very respectable position in this portfolio. I'll do a separate video on PayPal because it has been a while. I'm still very bullish on the company. I still believe that this is a $100 stock. I don't know when that will happen, but it will happen eventually. Now, you might say, oh, but opportunity cost. I mean, if this stock can go back up because the company does continue to grow and actually will see acceleration in growth plus margins become better, then why shouldn't this go back over $100, $150 in the future. And so, yeah, if I can double or triple my money, let's say 3 years from now, I don't mind not beating the market purely with PayPal at the moment, right? We've talked about this in the live streams, for example. If for 3 years, your stock, just one position, for 3 years, one stock does not outperform the market, but in year 4, purely just year 4, it outperforms all of the past 3 years. Would you still say opportunity cost? No. And if you do say opportunity cost, that just means you are looking at, hindsight, right? You're saying, but if I did buy this stock and then sold it on that date, yeah, okay, if and that and whatever. It just doesn't work that way. I'm very confident that PayPal will be, much, much higher in the future than where we're at right now because they're doing everything they should be doing. Just a matter of time until the market actually recognizes that PayPal is worth way more than just $73.43. In the meantime, the company will buy back $6 billion worth of shares, maybe even more. That's a bit less than 9% of the company at the moment. So yeah, I think that will work out. SoFi is of course the number one position here, 12.5%. I was thinking actually about buying more shares of SoFi this week, but I'm like, you know what, it's already pretty big. Plus I've got time. I still think that this one will definitely crush the market. I know you're either on the camp that thinks that SoFi is a great company, great stock that will outperform the market, or you're on the other side and so it's just a bank. And that's fine. That's fine. If you're on that side, you should definitely not own SoFi. It's completely fine. As for Google Alphabet, if I did not add a couple of weeks ago, I would have probably added more shares, even at $170, $173. I still think this is a wonderful company at a good price. As for the rest here, Micron will report earnings only towards the end of June. Now, we are making our way back up, right? We're at $108 already. But I do think that has happened last time as well. Stock rallied going into the earnings report and then it pulled back a little bit. Now, remains to be seen if they'll surprise the market on the upside. If so, then I do still think that this one has room to go up. As for Uber, this was one of the names that I said if we go back under $80 in the 70s, mid 70s, I think that's when I'll start adding even more shares to that company. Rocket Lab, I'm up almost 400% again on that position. I would love to buy back more. Maybe we'll get a small pullback, maybe not. And if I'm being honest, if we have positive neutron comments and developments, I might just average up as well. No issues with that. Nebius, same thing here. As long as I will feel comfortable about the progress, maybe we'll have some announcement, right? In the upcoming days, we will have a GTC in Paris, we'll have Vivatech, and Nebius will be there, so they might announce new deals. And if they do announce new deals, then yes, of course, I can see the stock go up even higher. We did talk a little bit more about Nebius, about CoreWeave over the past couple of days. Of course, now that CoreWeave is worth so much more than Nebius, maybe the market might just say, okay, maybe it's time to drop CoreWeave a little bit and then go and see, how much money we can make with Nebius. I believe in the long-term success of that company. Already up 104%, but I think we can go much higher. Of course, I'd love it if the stock chills out a little bit, so I'll have time to accumulate more and more. Then with AMD, we have an event, right? The AI event on June 12th. Hopefully they do not disappoint. If they do not disappoint, if they actually announce maybe a new big customer for them, I think this stock goes up. If the event is boring, I can see it pull back a little bit. As for the rest here, Meta, what can I say? Incredible company, incredible performance. Intel, this is a discussion I had with Jose. Intel is really now in a place where I guess the market is just waiting for positive results from 18A, plus maybe an announcement for Intel Foundry, right? We already had that Amazon strategic partnership, but now I guess the market is waiting, okay, can you attract one of those big players to become a Foundry customer? And once that will be, announced, if that will be announced this year, I can see this stock rally. It's a company worth $87 billion. I mean, a very good Intel should be worth hundreds of billions of dollars. I'm not just saying this because I'm a shareholder. You can talk with people in the industry and they'll tell you the exact same thing. A good Intel is worth hundreds of billions of dollars for sure. Then as for the rest, Tesla, already talked about Tesla on a Saturday. As for the rest here, cash position 3.17%. That means I have enough now to chill and see when we have pullbacks. I already explained which companies I'm going to be adding on those pullbacks. Celsius, I'm still down 7.5%. Now, I can trim those lower positions just to increase the cash position, right? If I sell, let's say, Celsius and Owlet, then I'll actually be in the green because Celsius, I'm down $250 and Owlet, I'm up $447. So I could just remove two positions, add another $200, another $200 of profit to the cash pile, and that's about it. But again, I'm in no rush. We'll see what happens with those positions. I definitely have no intentions to buy more Celsius, so maybe I should, right? Maybe I should just rip off the Band-Aid. Who cares, right? 7.5% plus Owlet. I think it can be worth more, but is it so interesting to me today? I don't know. Maybe it would be smarter for me to just get rid of these small positions and just put it more in cash and then focus on the top ones right here if we have a pullback. Yeah, I guess that's something that I'll discuss with myself over the next couple of days. I'll just keep one share of NVIDIA and Palantir. Maybe I'll have to increase a share of NVIDIA in the upcoming days because I do think Jose and I are going to be covering that event. And every event I have to add another share. So that was the portfolio update. Moving on to the upcoming earnings week. It's pretty empty. The only notable names I'd say here are one, GameStop, Tuesday after the market closes if you're interested in that. GitLab as well. Then on Wednesday, we've got Chewy, Victoria's Secret before the market opens, and then I'd say Oracle is the biggest name Wednesday after the market closes, and Adobe Thursday after the market closes. I do think that Oracle might experience the same thing we've seen with other companies. It's that the quarter is fine, just like Broadcom, which I'll cover in a second. Quarter is fine, but the stock just ran up too much, and so you're priced to perfection, and then the stock will drop a little bit. Maybe I'm mistaken, but we'll have to wait and see a couple of days. As for Adobe, the focus here will definitely be on the monetization of AI credits. How is that going, right? Because we know free cash flow growth is probably going to be another record quarter for them. That's no problem. The problem or the question is still monetizing AI credits, monetizing the new AI applications that they are releasing. How is that going? Hopefully, we'll get more answers Thursday after the market closes. Then, what has happened with the market after the Nasdaq 100 rallies from a negative 20% to negative 2% below the 1-year high within 50 days? Now, it didn't happen that many times, right? We only have here 1, 2, 3, 4, 5, 6, 7 data points. Well, we are the 7th data point to work with. And so as you can see, the odds are definitely in our favor. 1 week later, 2 weeks, a month, 2 months, 3 months, 6 months, 9 months, a year later. The lowest here were only 83% of the time we were green, but on average, we were still up 2.9%. Now, as you've seen, plenty of times we've had, scenarios where 100% of the time we were positive, and then suddenly we were in that case where, actually today we broke that 100% of the time. Could definitely happen. Then we've had the Circle IPO. So Circle is a fintech company specializing in blockchain-powered financial infrastructure. Its flagship product is the USDC stablecoin. You've probably seen that, especially if you are interested in, crypto or blockchain. You have USDC and you have Tether. That's basically the market leader in that market. So that's a regulated stablecoin pegged 1-to-1 to the US dollar. USDC is widely used for payments, trading, and DeFi applications across the crypto ecosystem. It was founded back in 2013, by the way. And Circle earns revenue primarily from interest on the reserves backing USDC, mostly US treasuries, which actually you can see right here, right? Total revenue and reserve income from continued operations. Of course, since 2022, interest rates have gone up. So yeah, it comes at no surprise that reserve income has also increased quite substantially. And this also, well, moves me to the risks, right? Because what happens when the rates come down? Now, I'm going to probably do a separate video on Circle because I do think it's quite interesting. If you're interested in that, do let me know down in the comment section below. And by the way, if you are a PayPal shareholder, you have exposure to stablecoins through the PayPal stablecoin, which I do think it has reached the $1 billion market cap again. Moving on to Broadcom. So Broadcom reported earnings over the past couple of days, and these were the results. Revenue was up 20% year over year to $15 billion. GAAP net income is up 134% year over year to just under $5 billion. Adjusted EBITDA of literally just over $10 billion. That was 67% of revenue. Free cash flow was up 44% year over year to $6.4 billion. AI revenue was up 46% year over year, over $4.4 billion, and they did return $7 billion to shareholders through dividends and stock repurchases. Now, they did say the following thing: Broadcom expects AI semiconductor revenue to accelerate to $5.1 billion in Q3, marking 10 consecutive quarters of growth. This indicates a strong and sustained demand for Broadcom's AI solutions. Infrastructure software revenue grew 25% year over year, outpacing semiconductor solutions growth of 17%, indicating a successful diversification strategy. Now, if we look at what the market is expecting Broadcom to do over the next couple of fiscal years, you can see that growth is expected to decelerate. Still expected to grow respectably, right? 21.7% in fiscal 25, then 18.2% in fiscal 26, then another 14.6% in fiscal 2027. As for free cash flow, that's expected to grow actually much faster than revenue over those next fiscal years. Now, the split here, of course, you can dive even deeper, but the main split is semiconductor solution revenue and infrastructure software revenue. Of course, since the acquisition of VMware, infrastructure software revenue has exploded, as you can clearly see right here. Right now, we're pretty close to a, let's call it 60-40% mix, right, between semiconductor and infrastructure software for revenue. But for operating income, now the operating income from infrastructure software is more than 50% of overall operating income. And as you can see right here, the total EBIT growth year over year is accelerating. And so with Broadcom, like I said, with Oracle, this was again one of those stocks where we've seen it rise. It was at all-time highs actually. And yeah, on Friday, it dropped just 5%. Now, big deal. You know what? As a shareholder, sometimes when you go into the earnings report, you have like a tax to pay, right? The information that you get from the earnings report and the earnings call is, well, at the cost of the stock maybe dropping, right? So Broadcom was up, I think, 70% or so more recently, all-time highs, $1.2 trillion in market cap. Now you've got an earnings report, an earnings call, and all you had to pay is just that 5% pullback. It's not that much, right? 5% pullback on a stock that's already up quite significantly over the past couple of weeks and month and a half or so. Just 5% pullback, and now you got extra information. I'd say that's quite cheap. And so that's about it for me in this video. If you have any requests or interesting companies you want me to cover, do let me know down in the comment section below. Yes, I know I still have to look at Reddit. That video will probably come out over the next couple of days. Hope you all have another wonderful Sunday, and I'll see you all in the next one. Bye-bye.